I'd like to welcome you all back to another podcast on the Raised on Real Estate platform, the RORE platform. Greg Angello with you here in the month of October. It's been a little bit since we've been back with you, but we thank you all for being part of our real estate program and our podcast. October 12th, getting close to the end of October. So much is happening right now in the world today around us, and also even in our real estate market. So much is changing day to day. And I think it's always important for those of you who are in the real estate business, in the real estate space, to stay abreast of what's going on and to stay educated, which is one of the reasons why we have our guests, our consistent guests with us. Michael Curtis is back with us. He's with Movement Bank. He has been dealing with a lot of different things in the real estate market from the lender perspective over probably the last 2 or 3 months that he's had to probably adjust to. Perhaps we're going to talk to him about that in just a bit. Before we bring Michael in, we just want to let you know that we have the Mindset Motivation Call. We do it every morning, 8:15. We start. We have a Facebook Live with that and also on live Zoom. So Brock Zivan, Mindset Motivation, we are growing every single day. We have some new people who are leading now, and we actually had a meeting today with Brock and our Mindset Motivation team, and we're going to be doing some other things coming up, and we'll have more about that in the coming days and so forth. Greg Angello here with you. Glad that you are with us. And Michael Curtis is here in the house, wherever house he's sitting in. I know I'm sitting in one too. Michael, glad that you're back with us. How are you?
Hello. Thank you so much, Gregory. It's so good to be back. It's so good to pull up the proverbial leather-bound recliners with you. You know, have that cup of tea or coffee, pick your poison, looking outside at the beautiful changing scenery down here in North and South Carolina, really the Carolinas, I should say. We're starting to really see those leaves change. And so, it's a little bit overcast today as well, and it just seems like a really good day for you and I just to kind of pontificate. Let's pontificate.
Are you reading a script?
I'm about to break out The Hobbit and just read a chapter of The Hobbit to you. It just feels like one of those days to pull up your favorite book and just kind of enjoy a nice cup of tea together.
I'm glad that you're able to do that in your in your world. Mine, I'm like, I've got electrodes sitting in my chair because I can't sit too long. So that's for sure. But man, You've been like a social media magnet over the last month. You're on. You're doing something on Friday afternoons. You're on Facebook Live. I see you out at open houses. I'm misstating Italians' names. I got to tell you, It's really funny because I actually called him.
I've always pronounced it Grappone.
Right. I'll have to edit that up. No, man. And so I called him up and I said, I see you got that South African out there. And I go, he doesn't know how to pronounce your name. And he goes, I know, he's from South Africa. He doesn't know how to, it's not Grappone. There's like no A at the end. It's Grappone. It's Grappone.
Oh my
so
gosh,
Jimmy Grappone. It's not like, it's like Michael Corleone. It's not like Michael Corleone.
Yeah. Oh my gosh. We're having too much fun today. That's so funny. I guess free advertising for Jimmy today. It's Jimmy's a good friend of mine. Known him for years. Same as you, Gregory. I've known him, but that last name, I guess, I don't know what it is.
It's funny. I'm just messing with you, man. I think it's kind of funny.
You're good.
But no, I mean, I know Jimmy. We all were in the same,
That's right.
real estate house a few years ago, almost 4 years ago now. But we were talking about this morning at the Mindset Motivation Call. I had actually talked about how to catch buyers in a different way. And the way that I've been doing it now, because we know that we have a buyer attrition as well as an inventory scarcity. But I think the inventory is a little bit different because in the buyer sense, they're holding back. One of the things I think that they're doing right now is because we're not in this multiple offer situation. We're not in high demand, over asking, high due diligence fees now. So buyers, they can pick and choose what they want. If they want to go to a showing, they have time to sit around maybe for 3-4 days, maybe even a week before they make a decision because the listing agent's calling up and saying, so what do you think? calling the buyer's agent. What do you think? What's in your mind of your buyer right now? Like, how many homes are they looking at? Like, before it was like, if you don't get that offer in here, like in 10 minutes, you're going to be out.
Right.
And we don't have that now. So they are really in a different position. One of the things I talked about this morning was the way that I'm going about how to get buyers through an unconventional sense, which is I'm actually calling listing agents around the areas that I have a listing in and seeing what they're doing, that they have listings. How many days of market are you at right now? Oh, I'm at 35 days. Okay. How many showings have you had? Is it okay if I promote your listing on my social media? I'd love for you to do that.
Yeah.
And would you do that for me? And so we have to start working more together, in ourselves and our, colleagues with one another, so that we can, we can extract a buyer from someone else's listing. We can do that.
Yeah. That's so powerful, and it's the right way to go about it. I think a lot of times in this industry, and my side as well, we look at our colleagues as competitors. However, when you think about the need, the demand for housing and real estate in America, other realtors, other lenders are not our competitors, right? These are colleagues that can help us all thrive together. Depending on the need of the individual, I might have a really good candidate for something for a different lender, which has happened, which will continue to happen. And I'll refer that individual to that lender, and vice versa. I might have an option like an off-market loan program that's a good fit for somebody as well. And so I love that mindset, because once you get out of that scarcity mindset and into that significance mindset, like here's how I can add you, Gregory Angello. Like, if I'm a realtor calling you and you're the listing agent, here's what I want to do to add you value. All of our ships can rise together. And I think that is the best way to approach it. And then to kind of say something before we move on too far from it, I've had the privilege of hopping on one of the motivational calls that Gregory hosted a few weeks back, and it was awesome. So if you guys are not familiar with this motivational call, it happens, I think, almost every day, every weekday. I think it's at 7:30 or 8 a.m. or 8:30 a.m. Just check Gregory's social media. It'll be on there, and join it, because if you want that multivitamin of motivation that you need, that's where you need to be. You're going to get pumped up. You're going to get some really good information like we're sharing today on this podcast. And a lot of times, as a lender or as a realtor, it can feel like we're an island and we're kind of just doggy paddling in place, just trying to tread water. Well, once we start getting into the motivational calls, once we start realizing that we're actually in this together, that's when we can start seeing some success together as well.
I 100% agree with you. Yeah, 8:15 a.m. is starting the morning show. But that really is significant, because we shouldn't look at one another as enemies or our foes. We need to look at it as we are trying to support one another, because we all have a goal. When you have a listing, I have a listing, we all want the same objective. Why can't we help one another? We're not trying to take something from you, like when you call a for sale by owner, because the first thing they say is, oh, you're just trying to get my listing. You're just trying to get me to list your home with you, right? Which is, yeah. The reality is, unless I have a buyer, I do want to get your property as a listing. And that's part of the process. So much is changing right now in the real estate market. So last time that you were on, we talked about, is this the right time to purchase a home? And we had some really great information. You talked a lot about what was so significant, because I continue to say that again with other people when they tell me, well, I was looking at this house so-and-so, but I don't think it's the right time. I'm just going to wait. And so I bring up what you said on that last podcast, which was, it's your time in the home, not timing the market.
Correct.
And then the other things that we were talking about towards the end of the podcast, and we do encourage you all to go back and listen to that one, is that you were talking about a different type of program for off-market. And I really don't know much about it. So we're in this podcast right now. So let's hear what this is all about. I'm excited to know more about it.
Absolutely. And before I dive into that side of it, certainly if you missed our last segment or last podcast, go back and check it out. We really started to go over overcoming those obstacles with buyers. And it's not just, to be argumentative, right? It's rather to be educational and to provide knowledge to individuals. And going back to like what Greg was saying about even the listing, he's articulating to a for sale by owner individual the value that he can add. It's not just simply to extract something out of someone. It's just simply to really provide the best possible value, best possible outcome for that potential listing that he could be able to help serve as well. Now, kind of going back to the buyer side of it as well, sentiment for buyers is really low. We talked about this a bit last podcast is what I'm trying to say. Sentiment's really low, and it's driven by what we see in the media, right? And so I'll continue to harp on that. The media, it's designed to keep eyeballs glued to the screen. So they're not there to necessarily inform you. They're there to sell a product. And so unfortunately, a lot of our 24-hour news cycles, you can pick your poison. It's based upon tribalism, and it's based upon the almighty dollar, advertising dollars. And so you got to be really cautious of where you're getting your information from. And the further you get outside of your sphere, so when you leave your main street and you keep going further and further out is what I'm trying to say, and you kind of get to these top level 24-hour news cycles, that's where you're going to see the most distortion from what is going to be your reality. Okay, so what that means is that you need to be on Main Street talking to the experts. And who are the experts on Main Street? Well, that local realtor, Gregory Angello, that has been doing real estate for years through every possible storm possible. Those are the people that you need to be talking to understand what's happening and what it truly means. Because two things happen when it comes to 24-hour news cycles. You're going to either have something that's a figment. It's a made-up anxiety that really has no impact. It's like the same thing, we elect a president, blue or red, Democratic or Republican. What does that do for you and me? Really, directly, not a whole lot. Indirectly, yes. You might see, some adjustments in your tax brackets. You might see some reforms. But as far as the potholes on your street, as far as you directly, you're probably not going to see a major change. So again, the further out you get from your circle of influence, your family, your community, the more distortion, good or bad, that's going to happen. So I really am trying to pull people back in, pull buyers back in. Well, why are you concerned about interest rates? Well, the Fed says they're going to raise rates. Okay, Mr. and Mrs. Buyer, do you know what rates that they're raising? Do you know how that works? Well, no, I just know that, MSNBC was saying it, and it looks really bad. And so it's like, we got to dig in. It's talking to the experts. Absolutely right, Gregory. It's time in the market. It's time in the home is where you're going to see it. But when you wait is when you give the opportunity cost to yourself. It's where that liability falls on yourself because it's time in the home. I said it before, and I'll say it again in this podcast. I'm excited for buyers. I'm excited. This is an amazing time to buy. Gregory and I watched the last few years as our buyers are beat over the head, absolutely discouraged by what was happening. And these buyers weren't doing cartwheels because interest rates were in the twos. They were beat up because of inventory. So now we have this balance that's starting to happen in the markets. Now is the time for buyers to really jump into it. Well, interest rates are 7%. Financing is temporary. The home is permanent. Get the asset. And when the markets come down, your lender should be reaching out to you to help you lower that interest rate when the time comes as well. So
that's 100%. I mean, 100% accurate. And I will tell you this. Here's the other thing. One of the things that we do on the real estate side is that we provide the homeowner or the potential homeowner of the market value of that property, the RPR, because even when you get into that home, in 6 months from now, we're going to send you a market report on your property. And so we know that real estate is always it's an appreciated value. And so I think that's one of the things that people seem to miss is that, okay, I'm renting now, you're flatlined, right? You're not up or down anywhere other than outside of your pocketbook. But once you get into that property, you have to sort of ignore the interest rate because your property value is what's more important. The asset of your home, as you said, is more important. And you're exactly right. I spoke to someone about this past week earlier on. I told them that how many people do you think that refinanced over the last 18 months? Well, I would probably say almost everybody in the entire country took advantage of it. Anyone that had a 4% or higher interest rate, probably refinance. It was unprecedented. And so do you think that may happen again in the next 2 to 3 years, or maybe the next 4 to 5? Because if you're going to be in your home for 10 years, I'm pretty sure you're going to have a different interest rate that you can benefit from. So yeah,
Absolutely.
100%.
Yeah, financing is temporary, and it's something that can adjust and change. What pains my heart is when I see people wait and they miss that appreciation. The opportunity cost falls on them because they decide to wait when they were in the position to buy, and that's the greatest challenge to buyers. And I feel like one of those preachers on the street corner. I'm on my soapbox. I'm on my soapbox right now, and I got my big sign up, and I'm trying to educate people. I'm trying to evangelize people to what is happening right now and how it can truly affect them. Because again, change your focus, change your perspective, and really think about your four walls, think about your sphere, and think about, am I speaking to local experts like Gregory, or am I relying upon 24-hour news cycles? Because if you're in that latter category, then certainly you can have a lot of undue anxiety that may not even be real to start with. Okay, so I know I'm preaching to the choir with you as well. I know a lot of our listeners as well. Like we're a lot of people that listen to this, they're in real estate. I get it. So we understand that. Now let's talk about some education. I'm a broker. One thing that I'm seeing on my side, institutional buyers, they're gone. I mean, we talked about this before. We talked about the idiots, the imposters, and the innovators, right? And so
Did you say idiot?
Can't say that word. But these people, they're gone. They're out of the market. So yet again, another powerful opportunity. I think since the last time you and I had our podcast, Gregory, the Zillow, they've packed up shop with their home buying program completely. And, we heard about the layoffs, but now they're out. And so institutional buyers are gone, which is, again, adding more bandwidth. Now, as a broker, something that I want people to be educated on is that we have on-market programs, and then there are off-market programs, okay? On-market programs, let's start there. On-market programs will be your standard financing options. You have your conventional, you have your VA, your government-backed loan programs like FHA, VA, USDA. That's going to be the on-market programs. This is where you're going to see the most volatility because those are tied directly into the regulatory bodies like Fannie Mae and Freddie Mac and Ginnie Mae, and which in turn are directly impacted by what the Fed do. Because the Fed, their number one weapon to fight inflation is their interest rates, is the overnight lending rate. And so as they tinker with that, we, of course, have those ripple effects across the bond market, across the secondary markets, and then all of those parties affected by it. And so the on-market programs is where we see stuff going up and down, up and down. I equate it to like gas prices, right? So when we see gas prices spike up, gas prices, gas in itself is not oil, and oil is not gas. So why do we see when oil goes up, like nobody asks this question, when oil spikes up, why does gas spike up? Because in one day, we'll see that exact change. But oil spiking in one day, let's say, I know nothing about energy. I don't know how, I'd have to look it up. But, if it truly was tied to oil, shouldn't it take days or even weeks for that ripple effect of the price of oil going up or down to affect the gas that we would have, right? But for some reason, it's the sentiment, it's the markets. When we see that spike up, for some reason, because it's in the same category, gas spikes up as well. The gas that you and I get on the street corner, right? The same thing's happening here. We see a change, which is indirect to what's happening to long-term mortgage rates with overnight lending rates over here. So it's an indirect relationship, but it is a relationship. And so we'll see that volatility going up and down, up and down, okay? Same thing happens to gas prices, that indirect relationship with oil and up and down, up and down, up and down. Off market. Okay, so off market is not as well known. It's been around forever. Off market has been around, but now it's the popular kid in high school. It got its makeover. So it's now here for people to check out. Off market has always been around. Usually it was kind of a niche. So, for example, most people, when interest rates were lower, people didn't really matter to people. They would get a conventional mortgage. Sounds good. However, if Gregory had somebody to say, "Hey, I want to buy some land and build," well, that's not an on-market program. That's an off-market program. And so, off-market has been, as a broker, something I've always worked with. Now, they've also always had mortgages. And so they used to be like a really good option for self-employed individuals, or if there was somebody who needed a really short-term mortgage or something, there was a different kind of category that we could get into with that. And so in this instance, now we're seeing, okay, mid-sized banks, which offer off-market programs, are now offering their options. They're seeing the volatility. They say, hey, we've got space on our balance sheet. We're going to offer 50 million or 25 million or 100 million in portfolio space for mortgages because we want good performing debt to have that steady revenue coming in. So they're offering simple loan terms based upon their terms of their four walls. So they're going to hold the mortgage and people can benefit from that. And so that's what your off market is. And that's where we're seeing people start to migrate towards, because these programs, for the most part, do have lower interest rates than your on market programs do.
Okay, Professor. In layman's terms, when you said land was available, they bought land. So are you talking about new construction as a way to finance the off market? Is that what you mean? Okay.
Yes. So, and I just had to run to my office door and slam the door because my kids are coming home from school, and it's about to get wow.
I thought I tricked you, man. Thought I tricked you.
You looked up and I was gone. The camera. You're like, whoa, where'd you go?
I stumped him, folks.
That was it. I had to run. So off market was for those kind of funky things like land or construction. Now we have like bona fide mortgages too. So it doesn't have to be something funky. It could be somebody that qualifies for a conventional mortgage and they just want to see what does it look like with an off-market loan program. So, Gregory gets somebody under contract. They already been pre-approved with conventional, a standard loan program. Well, there might be a really good option for them to also look at off-market options because we might see that that's a better fit for them just from a value standpoint because the difference in the interest rates between the off-market and the on-market right now. Something else that is really cool about the off-market programs is that because they're simple loans, they don't have any private mortgage insurance on them. So you could have a mortgage with less than 20% down and not have to pay private mortgage insurance. For those listening that are not familiar, historically with an on-market program, if you put down less than 20%, you would have private mortgage insurance built in. With the simple loans, again, you simply have to meet the requirements of the off-market channel, and you get the loan. There is no bells and whistles on it.
Okay. All right. So let's try to do an example, because I think that will work best for people who are listening, especially for those that have just heard of this for the first time. And so I'll give you a bit of a scenario. Tell me whether or not it's right, on target or not. So Billy and Sandy, they come to you and they're like, okay, I talked to Greg and we're going to start looking at homes. And you say, okay, we're going to go through a pre-approval process and go through all of that. And, we'll get you your pre-approval letter, get out there. So I now take them over and I'm out showing them homes and they like this one, whatever it is, 129 Main Street. So how does the off-market mortgage program come into play with that?
Yeah. So the way that would work is, again, if you're starting to start the home buying process, as a broker, I'm reviewing you for not just one program, but for many, many programs. So we're going to look at what it appears to be for a conventional loan, for a standard financing on market, and we're going to look at what it is for off market. In both situations, I would recommend that we have a full upfront pre-approval, something that we've talked about before in subsequent podcasts that we've done. What it looks like as far as for the buyers, very similar. They're going to get all the regular documents like pay stubs, W-2s, etc. We're going to have that submitted for a full upfront pre-approval with the on-market guys and also with the off-market guys. So we can have a full pre-approval for both. Let's say, you're house hunting and we just need a pre-qualification while you gather documents. You can have a pre-qualification for the on-market and the off-market as well. And so the way I tell folks, If Gregory's going to submit an offer for a house, okay, great. I'm going to call the listing agent and explain to them, hey, this individual is pre-qualified or fully pre-approved through underwriting, and here's what this program is and how it works. Because we want to educate people as well, because it's not that people just are not familiar with it. But basically, that's it. I will say this as well. If an individual is pre-qualified for conventional, or if they're pre-approved with conventional, fully through underwriting, they should really get a second opinion for the off-market program as well, just to see if that's a good fit for them.
And how many institutions offer that? Is it across the board, or do you have to be a certain mortgage lender to offer that program?
So you really have two different categories of lenders. You're going to have retail lenders, and you're going to have wholesale lenders or brokers, which is what I am. Retail lenders are confined to their four walls, as it were. So it's what their institution can offer, which is typically not off market. Usually it's something that institution, they want to do mortgages so that they can sell mortgages. And that's how these retail mortgage companies make money, is by selling the mortgage.
Like banks, right?
Yeah.
Mm-hmm,
And
right.
so like the big banks, for example, which is another reason why a lot of the big banks, a lot of the big banks have pulled really far back out of mortgages right now. They understand that this is, for them, they have to sell a lot of mortgages to make money, so they don't want to do it. Now, wholesale brokers. So again, I'm a broker. Brokers typically will have access to not only on-market channels, but also to the off-market channels. Because brokers, they face wholesale channels. They face other institutions that speak to brokers. They need brokers to be able to access clients to add to their portfolio or to whatever programs that they offer.
And how many of those do you see coming in now with the attrition that we discussed earlier? I mean, is this a better way now to try to get people pre-approved or get more people in to play the game than before?
I think it's again, you got to think about best value, right? So I wouldn't say it's for everybody. I would say that it's good to be reviewed for it, get a second opinion. But again, it goes back to what is the best value option. Of course, having a lower interest rate is going to drop your monthly payment. And so with this program, you're going to be able to see that could be a good option for you. Another option, right, is just going on market, going with the on market. What is the best value option to me? And what I mean by that is in not buying a bunch of points down, because now you're making your mortgage expensive. But if you are of the mindset, hey, I need to buy the house now. I want to buy the house now, but I'm going to refinance in a year or 2 years when the Fed is done doing this economic surgery and artificially bringing rates up. Well, when they come down and refinance, you might find that on market is a good option too. And that's something I'm going over every day with my clients is it on market a good option or off market? And of course, the interest level in off market is very high right now because of the lower interest rates. People are finding a lot of value with it.
Okay. So who would be a primary candidate, if just as an example, who would be a primary candidate versus a traditional borrower?
So again, the off market, these guys are really, they don't want volatility. So off market are not the big banks. These are going to be the banks that are mid-sized. They might serve like a 3 tri-county, tri-state area. So they're not big behemoth banks. These guys, they work with brokers like myself, and so they don't like volatility any more than you and I do, and so they are impacted too. So what they say is a good way to have a good stable debt or good stable income coming in the door is mortgages, right? So mortgages are historically a really safe, good debt, and something we've talked about before in a personal finance podcast, which go back through to that one as well. But mortgages are usually pretty stable. There's been one time in history where mortgages were the bad guys, 2008. But again, that was a one instance. Historically, mortgages are a really solid place for banks to be able to offer and then to be able to receive revenue from. And so these mid-sized banks, that's what they're doing. It's a
Okay.
really good way to just make sure they have a safety net. And so again, if somebody is qualifiable for conventional, then that's a good idea to get a second opinion for an off market because they are if you have poor credit or fair credit, I wouldn't recommend looking or targeting an off market. They want good, strong performing debt. They're just gonna they want to avoid any type of potential risk of default on this side. So if you're over here with conventional, then let's take a look at what the off market looks for you as well.
Okay. Now, I have heard some people say because we are in this volatile market that maybe a variable interest rate mortgage loan might be suitable. What's your thoughts on that one?
It goes back to the best value prospect, right? So when I look at options available to people, people want that super sexy interest rate. They want to have what is going to be, the best value option to me, and they hyper focus on the interest rate. Interest rate's important, but it is temporary. You mentioned that earlier. This is something that we can change, even if it's fixed, even if it's adjustable. We can change this interest rate and do a refinance at any point, right? So same thing here. I'm not, like shooting a lot of clients towards arms because when I run the numbers, I look at a fixed standard on the market program and I look at an off market program and then I look at an arm. Arms are pretty expensive. And the same with these 2-1 buy downs, which I know we haven't even touched on that yet either, but these which kind of fall in the same type of category, they just tend to be a lot more expensive than over here. And so for me, if you're gonna get if I'm gonna get a mortgage, that's the way I look at it, or if I'm gonna give a mortgage to my brother, I want to make sure they're comfortable with the monthly payment, but I also want to make sure that they have the best value option. And heaping a bunch of origination or points on top of a buyer is, in my opinion, not good business and not best value for the client. Yes, the interest rate might be a little bit higher if we're taking the market rate based upon where it is now. But again, when the market comes down, the idea is we're going to refinance that.
Mm-hmm.
So all these points you paid anyway, this individual over here is going to refinance and make it up even before the person that bought it down does.
Mm-hmm. Well, that's an interesting point because you brought up just what I just said, points. All right. So people are like, what's PMI? So, and we've touched on that before. So the other term that's being floated around in the mortgage industry right now is what's called the no ratio loan. Now, you and I had a conversation about that because I asked you whether or not you can get I don't know if it's a qualified loan, maybe it's an off-market loan where they don't use your pay stub or W-2, that they basically are going to look at your income or your bank history. So maybe they take a look at the last 24, 36 months of your steady, it doesn't really mean income, but your inflow of money into your bank. Now, the interest rates are here higher. They could be like 8%, but the benefit from what this one person was telling me is that since there are no points associated, there's no PMI on this, that you basically would be at where a conventional interest rate would be anyway. So what are your thoughts on that?
They're very similar to like commercial, right? At least it reminds me of like these commercial type programs that are now they're kind of pulling out pieces of these for our side of it on the residential side as well. And I don't think they're a bad idea. I think it's another alternative option that could be a good fit. Again, everybody's financial picture is different. So if somebody has a financial picture that fits, in my mind, when I think of a program like that, I think of my self-employed individuals, somebody that might have a lot of cash flow coming in and their taxes might look really funky, but they have this cash flow, right? And so if we can document the cash flow, that might be a good option. Another would be like the asset depletion program. So an asset depletion program, this is something that I actually find is a good option for retired individuals. They have a fixed low income, but they have, $500,000 in an IRA, or they have, 1.5 million in an IRA that they've saved over their lifetime. And so we can use that assets, like we're not actually pulling any money out or anything significant, but where we use that assets not income, to qualify for a mortgage. Because,
Right.
you
Mhm.
know, if they're buying a house for $400,000, they could buy it for cash, you know, quote unquote, 4 or 5 times over based upon their balance in their retirement account. So, you know, these programs are similar in mindset of what you're describing. And it's just another alternative that might be a good fit depending on the unique situation of an individual's financial picture. I've always said mortgages are really, really easy until you add people, Gregory. And so people they have
Yeah.
complicated, messy situations, myself included. And so, you know, it's not me saying it's negative. It's just it's part of life. And
Look,
so,
I know.
um,
It's an interesting point because I
yeah,
could say the same thing that selling a home is easy until you add people.
that's exactly right.
Because all the emotions come into play. And so, one of
Yep.
the things that we're dealing with right now on the real estate side, on the listing side, is patience because
Mm,
sellers are not adhering to the current market. They know that we're in a different real estate market, but within 7 to 10 days, they're like, well, how come I don't have an offer?
hmm
You know, what are you doing? I thought you were going to do this and I thought you were going to do that. Why have I only had one showing? I mean, what's
hmm
going on? This is one of the things that we're dealing with. This is why I brought up this morning about how we can coordinate with other people in our industry by reaching out to them, because I think that
Yeah.
we all are being affected at the same time. Now, there may be some areas that people are getting offers quickly. It would depend on, I would say that you need to get into a very, very micro area of where you want to be. There are some hubs, especially down here, that you put a house up and you will get offers on them. But I think that right now the landscape as a whole, that everyone is having the same effect, which is more days on market. The other thing that I have been experiencing over the last 2 to 3 weeks is I've been getting texts from mortgage loan officers. Greg, are you doing an open house?
Mm,
Greg, can I share your property? What can I do to help you get somebody into your home? And so I think it's good to have that collaborative effort.
yeah.
And because we know that there's not only going to be attrition in our real estate industry, but there's going to be attrition in the mortgage loan industry, right? Because if
Absolutely.
you don't have enough applications coming in like you were doing before, then there's not enough meals in the pot for people to eat from, right?
Right. I think it's also you kind of reminded me, and I'm glad we're talking about this. Something to advise our clients on as well, our buyers. So this is a very, very tough time for a lot of banks. So a lot of banks, you know, they went through 2020, 2021, record profits, record earnings. Finance sector was really, really strong with lower interest rates. What we've seen now, and I mentioned it earlier this year in our last podcast or so, we're going to see a lot of these people are going to start to shift out of the market. That cannot adapt. And we've seen that. Now we're in October, right? So there's this adjustment as these people start to come out. And buyers, they need to understand if you're buying a house right now, there is desperation out there. So, for example, one of the things I've been warning my clients of is similar to like if you get into a fender bender, right? So, if you get into fender bender, that's recorded at the courthouse or in public record information. You're going to start getting all those spam letters in the mail from like the ambulance chasers, the attorneys that they want to get involved, right? Same thing happens here whenever you're applying for a mortgage and you consent to having your credit being pulled, which is not a bad thing to have your credit pulled, but it is public information that the credit bureaus share when you get your credit pulled. And so my clients, I've been warning them when this happens, you're going to have a lot of just it's going to peter off, but initially that first couple days after it happens, a lot of spam calls, a lot. And so you're going to see on the real estate side as well, a lot of people are going to be calling you if you're in real estate because there's just, it's like you said, the pot has shrunk. The pie used to be nice and big and now it's shrunk. And there's not enough people to sit around the table anymore with how big it is with the tinkering that's happening in the Fed. Now, when the
100%.
Fed is done, maybe there will be a little bit more breathing room there. But for now, that's what we're seeing as well.
Yeah. The saying that people will do desperate things during desperate times. And when we
I
are
think
going
there's
to
a,
be seeing, like you said
yeah,
earlier, when you talked about the institutional buyers who are falling off the wagon, Those
Yeah.
that are trying to keep their head above water are going to be doing anything they can to create either a fear mentality,
Mm-hmm.
especially on the seller side, because you talked about the buyers on the seller side.
Mm-hmm.
They're going to be calling up and saying, well, you may not get that home sold now, and you're going to be losing all your value, and you're going to be sitting there for 6 months to a year. Do you really want to do that? Or we're going to offer you a cash offer right now today. Now, we were
Mm-hmm.
offering cash offers before, but now
Yeah.
because there's this fear mentality out there, and you also touched about it about, what the media is bringing out there. And it's going to create even more of a fear mentality, not so much hysteria, but I think that people are going to feel desperate from an
Mm-hmm.
emotional standpoint, not from a reality standpoint, but from a
Yeah.
desperate, from that mindset of,
Yeah.
if I don't, yeah, maybe, honey, we shouldn't wait. I mean, we've had nobody at our door. All I'm seeing prices coming down. What's going to happen to the value of our home? It could be like 2008. Why don't we just go ahead and just take it and we can walk away?
Mm.
And I think that is why you need to have those of you that are listening that are thinking about taking those sort of offers or getting those phone calls, please take a deep breath,
Mm-hmm.
call a professional first. Either call a mortgage loan officer, you call Michael Curtis, you call a realtor, you call me, and have a conversation before you do anything desperate.
Yeah, I think it's so important to stay in that significance mindset. People are thinking they're in the scarcity mindset. Like they're going into scarcity, and I don't want to take too much time, but I'll share this with you as well. Yesterday, I was having a WhatsApp call with I'm from South Africa, and so I have a lot of folks over in South Africa I'm connected with, and business owners, etc. And I was speaking to them over there, and he was telling me, he's like, gosh, we wish we had your problems. Just think about that for a minute, Like we think we have it bad, right? And so they wish that interest rates where they are. They wish that they had the growth or the decline in growth that it feels like for us, right? And so if they're able to operate from a place of significance in production in their markets, and that is tenfold more volatile than ours is, then why are we in the scarcity mindset when there's people around the world in our backyard that wish they had our problems? So remember that, get out of that distortion and find Main Street, find that expert and start talking to them, because that's where you're going to be able to see, oh, okay, the world is not on fire. We're simply rebalancing, and it's going to be okay. And so I think that's the most important thing to remember, is just remember to remain in that significance mindset.
Good stuff, man.
Good
So
as always.
I think this is good. I think we covered a lot of ground. I think that people
Yeah.
are able to take all of it in. So we're going to wrap it up here in just a little bit. We know that Halloween is going to be coming up soon. And Michael, have you picked out your outfit yet?
Ooh, I think my kids have picked out my outfit for me. So I think we're gonna have a Toy Story theme. I actually don't know which one I'm supposed to be. It's changed so many times now, but I'm just along for the ride.
It's interesting you mentioned Toy Story because Isaac has been watching like Toy Story 1, Toy
Yeah.
Story 2. I didn't even know there was a Toy Story 4. So,
Oh my
yeah,
gosh,
I
there's
didn't
too
know
many
that.
now.
So that was on. That's been a whole week or
Yeah.
so of Toy Story, but he has got his costume. I don't know the name of it, but it comes out of the Sonic family. Those of you who
Oh
know, yeah.
yeah.
So he's got it all set
Yeah.
up now, and I don't know about what you deal with, but when you get the Halloween costume for your kids, those of you who have children that are doing that, dressing up. Some of us adults, I
Yeah.
see adults do that. But is it typical for the child to wear out the Halloween costume before the actual day arrives? I mean, what's up with that?
They got to break it in.
I mean, Isaac had it on, and before I know it, there was pieces in one spot, pieces in another spot. We
Uh-huh.
have two dogs. Casada was walking around with something in her mouth, and it was part of the costume. Like, this thing is going to be trashed before Halloween even
Uh-huh.
gets here. So, those of you out there, listen, man, put those stuff in a closet, and don't let anybody get in there until the day before, because you may have to go out and get another costume before it comes down and spend more money out there.
Now that's the real words of advice. If you forget everything else being said today.
It is. See, folks, we do bring value to this podcast, right? We just told you how to save money in Halloween costumes.
There you go.
Absolutely. Oh, man, you should have been in my mindset call when I was talking about cereal boxes.
Oh, boy.
That was a great one.
I need to jump on there. I need to start jumping back in.
That was a blast, man. The number one cereal in the United States, in the country right now, do you know what it is, Michael?
Fruit Loops? Frosted Flakes?
Oh.
Oh.
No. Honey Nut Cheerios is number one.
Okay.
Yeah.
Okay.
And I think it's because they have that banner right across the front of their cereal box. It says, can lower your cholesterol level. And I think that's what people are buying into, is that what they see in the outside of the box. But that was a good one. We are going to wrap this one up. We want to thank Michael Curtis for coming in again. Michael, great stuff today. And folks that are listening and they want to hear more about the off-market loan programs or even the on-market programs, how can people reach you directly?
Yeah, thank you so much. It's always good to have an opportunity to just sit down and get all the super nerd stuff out of my system. So I appreciate you letting me do that. I can be reached at 803-389-5256. Text or call.
All right, Movement Bank. That is where
Bank.
That's where Michael is at. And also, those of you who Google him, I guess, as well, or, I'm sure he's open to, his Facebook is open. You can catch him on Friday afternoons at 12 o'clock live. He's sitting in another brokerage firm with one of our top agents that are out in our real estate world doing some sort of Friday afternoon talk. Right?
Yeah, we've been doing a work week wind down, and we've been doing Facebook Lives. And so this one will be walking through Fort Mills, Walter Elisha Park, where they have their scarecrow crawl. So we'll be looking at all the different fun scarecrows. So don't miss this. It should be a lot of fun.
Awesome. Good stuff. All right. Mike, we thank you so much for being with us, and we look forward to you to coming back real soon, and hope everything continues to go well with you and your family and your business, and we appreciate you.
Thank you, sir. Always a pleasure.
And we thank all of those of you out there that have been listening to us. We thank you so much in our podcast world for Raised on Real Estate. My name is Greg Angello. We appreciate you. Take care of one another. Be nice to one another. Love one another. We'll talk to you all soon. Take care.